Hi there, this is your mentor Spoo from FOREX&YOU, and in today's video we'll be showing you guys how to understand the basics of trading. This will be strictly a beginner video, and in today's video we'll be teaching you guys how to understand market setups, how to understand trends, and so forth. Make sure that you like, comment, and subscribe. Switch on the notification bell so that whenever the channel drops, you are being notified. Let's get to it. So, beginner students, make sure that you grab your pens and papers. So this will be your support and resistance course. It's absolutely for free. This is what we do as an institution. We try to give back, and we try to equip beginner students with knowledge that is not very seldom. So let's get to it. So let me just draw my up and down channel. So basically what we like to do is the market will always repeat itself, right? It'll have an up, down, and up, down formation. So as you can see, our trend or our sideways market is starting to take shape. So this is very simple. It's your usual up and down trend. So for every upward movement, we need to have a downward movement because price needs to come and fill those orders. So with that being said, this is your side channel. As you can see, we do have our ranging market or our sideways market. Now what we're going to look for is we're going to look for key areas, right? The market where it respected these areas is going to be happening in a repetitive manner. As you can see, we have our first touch, second touch, and we have our third touch right there. So this is your basic support and resistance. However, things do not really play out as perfectly as it seems on paper right now. On a sideways market, this is where the price is basically at equilibrium. You know, this is where the price is not having a clear direction. This is where the price actually consolidates, and tell you what, things do not appear as smooth as we have drawn. So I really hope that with that being said, you did understand with what was said on the previous setup. So now we're going to be having a downtrend channel. This is a bit tricky because a lot of people usually look for price to actually respect your trend lines, but it's not always the case. So what we have is we're having a lower low right there, and we're having a lower high right there, and we're going to be having another lower low right here. as explained, we let me just circle this support trend line of my trend. So as explained, this is how the market usually moves. We have our lower high right there. So from our lower high, we have a lower low. So this is basically just an indication that the market is having a downtrend. You know, this is just another confirmation that we use. And obviously, with that being said, that's what the market usually gives us. We have a lower high, lower low, and yeah. Now we're going to be having a uptrending market, or an upward channel, whatever that you want to call it. So this is where a lot of people usually buy the market instead of selling the market, because it is very disingenuous for you to sell an uptrending market, you know, because you're bound to lose capital, and anything, I mean, like anything can really happen from that point. So as you can see, we had a rally and we had a retest, rally, a retest. So sorry for using those exquisite terms. So basically we have an uptrend, downtrend, uptrend, downtrend, as simple as that can be. On our uptrend, it'll be like literally the opposite, because on our uptrend, what we have is we having a higher high, higher low, higher high, higher low, as opposed to having your lower lows and your lower highs, lower lows and lower highs. We're going to be having our first touch right here, first touch, second touch, third touch. So this is just an indication of an uptrend. So what we have is we having our higher low right there, higher high right there, higher low right there, and so on. So with that being said, the market actually gives us all sorts of confirmations, and all you need is just patience. You have the confirmations, all you need is patience to execute your entries or your orders. So what we normally do is we trade the market in the most simplest of ways possibly done or possibly approached. Now we're going to be heading to your head and shoulders. So what is a head and shoulder? A head and shoulder is a pattern that is not very much a stranger to the market. We strictly believe that head and shoulders are a form of a fake out, because the head, it usually breaks your zones or whatever trend lines that you have. So to form a fake out, to trap traders that are selling or trading against the market, and then so that's in a nutshell, that's what a head and shoulder is. So we're going to be strictly focusing on that. So as you can see, this is the most perfect head and shoulder that you can ever draw. However, we do not encourage you guys to draw it perfectly. You must always know how to adjust your market analysis, know how to trade the price. Do not trade what you see, but trade the price. That's what we usually do, as an institution. So as you can see right there, we had our left shoulder. That is our head right there. That should be our head right here. Let me just write the S. That's our right shoulder. So this is where people that will be hoping towards buying the market right there, from that support right there, people that trade support and resistance, they'll be hoping to buy the market and put their stops below their entries. And what we've learned is that with the head and shoulder, they've always went for their stops, and that is just like one of the most fundamental or important patterns that are in the market. So now we're going to be drawing an inverse head and shoulders, and let's get to it. We hope that you've learned a thing or two about the markets. This is your mentor Spoo from FOREX&YOU, and I'll be signing out. Make sure that you like, comment, and subscribe, and switch on the notification bell so that when the channel uploads, you're being notified.